My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? Oh, I'm just trying to make you some money. My job is not just to entertain you, but to educate, teach you. Doesn't matter where I'm coming from. So call me at 1-800-743-CNBC or tweet me nicely at Jim Cramer. To nest or not to nest? Is that really the question? This is a tricky moment. The stock market's had an enormous run from the bottom. The Dow gaining another 476 points today. S&P jumping 1.39%. Nasdaq climbing 1.56%. Bye. But the vaccine situation is still fluid, and we don't know when we'll be able to safely reopen. Why does this matter? Because the nesting stocks, that's what we call them, are starting to falter. We're all itching to get out and want safe to travel again. The whole segment of the economy is going to catch fire the same way the Roaring '20s followed the Spanish flu pandemic. So suddenly people want to invest in the reopening stocks, and yes, they want to sell the stocks that are involved with nesting at home. I think that may be a mistake. Too simple. At the end of the day, companies are not static beasts. That includes both the nesting plays and the reopening plays. They're not sitting there saying, "Oh, let's make some hay when the sun shines, but then we're going to be big losers." Their CEOs are taking actions to ensure they come out of this crisis in better shape than they came in, which means their stocks aren't necessarily sales. So let me give you some examples of both the reopening plays and the nesting names. You know what I'm talking about. Yeah, anyone who's watched the show knows I've been recommending Disney and Boeing for months. Why? Because they're household names that will make a killing once we beat COVID. Going to Disney World is an all-American vacation. It's practically a rite of passage. I almost said rite of passage, like I'm some fancy French guy. Rite of passage. I've been over a dozen times I've been to Disney World, and always going by plane, and usually a Boeing. Both companies have been hard hit by the pandemic. Disney makes movies. Well, people aren't going to movies. They have cruises. People aren't cruising. They have a sports channel. The sports were canceled. They have theme parks that can't make money without big crowds at a time when crowds are super spreader events. As for Boeing, I mean, who the heck wants to buy airplanes when nobody's flying? So did they just sit there and take a beating? No, the opposite. Both companies adapted. Disney doubled down on their new streaming service, Disney Plus, to reach viewers stuck at home. Wow, what a home run. It basically became the ultimate nesting stock. But you never forget what could become once the country reopens. Meanwhile, management cut costs aggressively, and that's going to mean that the margins are going to explode higher when things go back to normal, and that's what those big hotshot Wall Street guys really love. Now, that's why Disney stock is up huge today. Sooner or later, we know the world will reopen, and Disney will be ready. To nest or not to nest? It's barely the question. How about Boeing? This morning, they announced what's basically a big refinancing deal. They're borrowing $9.8 billion to repay higher interest debt. That will make it easier for them to get through what are hopefully the final months of the pandemic. But like Disney, Boeing was always going to make a comeback once people can travel again. And I expect a ton of travel because people are going stir crazy right now all over the world. And they've also got a lot of discretionary income saved up in this country, especially because there's been a year we haven't been able to do anything. If there's a travel boom once you reopen, and I tell you there will be, the airlines, well, they always need planes. And Boeing's got all the inventory they need, and then some. The company reported a hideous quarter last week, one of the biggest misses of the year. Maybe one of the biggest misses I've ever seen. But the stock barely got hit because investors are looking to the future. The important thing, though, is that Disney and Boeing use this time to improve themselves. So they'll be in better shape when we go back to normal. On the other side of this false dichotomy, you've got nesting names that did the same thing. Look at Amazon and Alphabet this very evening. We think of Amazon as a nesting stock because when people stop shopping in person, they defaulted to e-commerce. If half the country gets vaccinated by May, will they start shopping back at those stores again? Or have we discovered that time spent at the store is time wasted? Well, Amazon just reported arguably the best quarter I've ever seen versus expectations. And the guidance was bullish, too, confirming that it's a post-nesting trade. Highly unusual to get both, by the way. Why is the stock getting hit, then? Because Jeff Bezos is stepping down as CEO, although he's going to stay on as executive chairman. Andy Jassy of Amazon Web Services taking the reins. I'm a huge fan of Jassy, been on the show, and of Web Services, where it all happens. Bezos is admittedly irreplaceable, but he's executive chairman. And with Jassy, and maybe you're getting a twofer, I'll take it. How about Alphabet? Maybe I know you call it Google, but I'm calling it Alphabet. This is widely viewed as a nesting play because we're so reliant on the internet right now. But at the end of the day, Alphabet's biggest business is still Google, and Google's hostage to advertisers. Normally, they make a lot of money from travel and leisure ads, but all those ads disappeared thanks to COVID. So when we reopen and all those lucrative travel ads come back, Alphabet should be able to make a killing. Alphabet's latest quarter shows you how hard it is to pigeonhole an amazing company. Tonight we saw a new reporting structure that actually shows off the strong growth of Google Cloud. I think they're spending aggressively. They're not making much money. They're not making anything yet. But don't worry. It's early. My favorite part, YouTube. We spend too much time talking about the decline of broadcast and not enough time talking about the rise of YouTube, which is where the money seems to be going. Bravo on a clean, strong beat with, wow, beautiful margins. I mention these two because tomorrow there'll be people telling you that the nesting trade is over. Yeah, you need to dump Alphabet. You should sell Amazon. Their stocks might even get hit. The way United Parcel temporarily sold off today after a tremendous quarter. More on that when we speak to CEO Carol Tomei. But it's not nesting versus reopening stocks. Don't believe what Wall Street says. It's about good management versus bad management. Disney, Boeing, Amazon, Alphabet, they're well run. Now, maybe you don't care about this rotation. Maybe you're more focused on Reddit and Robinhood. When I came back from surgery, I urged you to consider that death match a sideshow. That's why I told you to look for larger themes last night. Actual long-term stories where you're betting on something more than substantial in the short squeeze. Boy, did a lot of those stocks go up. Holy cow. Remember, you want theme stocks, not meme stocks. Hey, I got a meme myself, so I know how ridiculous they are. Some of these theme stocks have a real thesis attached. And some of the memes do too. But let's take one, AMC. AMC's a reopening trade, right? The movies. But maybe movies aren't the most popular destination when the world goes back to normal. Maybe we drop the ball with the vaccines again and the whole trade sputters. Maybe film has permanently lost market share to video games after a year of gaming. At the end of the day, I'm not interested in AMC because it's a poorly run company. It's trying its best, but with a lousy balance sheet, you can do better. That's why I've spent the whole pandemic searching for companies that have reinvented themselves, making things better, not just the ones taking advantage of a temporary boost, whether from the lockdowns to the reopening. I'm worried about some of the companies that have made huge money in the pandemic, like Pfizer, which may not have a second act once we're all vaccinated. But I never worry about a company like Apple, own it, don't trade it, because it's always been about making the best product for the consumer, regardless of what happens with the pandemic. That never goes out of style. The bottom line, rather than swapping out of the nesting stocks and into the reopening plays, you want stocks of well-run companies that can keep working, even if it takes longer than expected for us to get vaccinated. If you buy the best of breed, they'll adapt to anything, including the long-awaited conclusion of the worst pandemic in decades.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.